All right, hopefully this is going to be a quick video. All we're going to do is calculate estimated taxes for each quarter for a corporation. You can apply similar standards to an individual, but understanding corporate estimated taxes and how you calculate those payments is a pretty important thing. So I've got the facts here. You can stop the video and read them if you want. What we're going to do is I'm going to take us out to Excel and we're going to complete the question in Excel. All right, so I've got the Excel spreadsheet up. Let's get started. So let's look at the facts. Alberta Corp is a calendar year end corp. Okay, that makes it easy. In the previous 3 years, they reported taxable income of 680, 1.1, and 925. Okay, so within the previous years, they've exceeded the $1 million worth of taxable income threshold. They are considered a large corporation for estimated tax purposes, which means that we can only rely on the prior year liability for the first quarter payment. The first quarter payment only. So then we've got some year-to-date estimates of income for each quarter. Now these are year-to-date estimates, just so we understand. It's not the quarter itself, but it's through the end of that quarter year-to-date. Prior year liability was $94,250, and they actually had an overpayment that they're going to apply to the current year. So using this information, let's calculate the estimated tax payment for each quarter. So first, let's deal with quarter one. The quarter one first quarter tax payment is going to be due on April 15th. And how are we going to estimate what we think Alberta Corp owes for the year, and then how much of that is going to be due in the first quarter? So let's walk through this calculation. So through the first quarter, which is the only information we have, and I'm not sure why that's in a percentage. Let's get rid of that. And now let's make it the number we're looking for. There we go, 225,000. So this is our estimate for year-to-date income through the first quarter. Well, the way we use the annualized income method is we need to annualize that income. So how would I take 3 quarters worth of data and turn it into a year's worth of data? Well, how about I multiply that by 4? So let's multiply that by 4. I got rid of the crazy percentage formatting with a quick pause in the video. Okay, so now let's annualize that first quarter. Oh, I didn't get rid of it apparently. All right, so we got 900,000. Oh, in this case, maybe it will work out for me. What is the tax rate? No, it doesn't. How about that? The corporate tax rate is 21%. So if I had to estimate what is the tax that Alberta Corp is going to have to pay for the full year at this point, it would be the estimated annualized income times the tax rate, 189,000. But we don't owe 189,000 at this point. We only owe the first quarter's worth, right? We're making our first quarter payment, so we only owe 25% of that. So it turns out that our estimate of our first quarter payment is $47,250. However, remember, we're a large corporation, and one of the things we can do is use the prior year to establish what our first quarter payment might be. So that was $194,250 was the prior year liability. But again, I don't have to pay all $194,250. I only need to pay 25% of $194,250. So it turns out I'm generally going to try to pay the lower of the two of these. And as you can see, the lower of the two is the actual payment itself. So as it stands right now, my required payment is $47,250. However, I've managed to carry forward from the prior year a payment of $4,500, right? So I'm going to apply that to the current year. So my actual payment is $42,750. So I'm going to owe the government a check of $42,750 for the first quarter. All right, now let's march on to the second quarter, right? We're working our way through the year. This payment is due on 6/15. So as of 6/15, what information do I have? And this is where when you get this information presented to you, hypothetically, it can be confusing. But in real life, this won't be confusing because it's June 15th. And that second quarter information is not yet available. You have not yet closed the second quarter. So we are in fact going to annualize based on the best information we have. Darn it. Which is the first quarter's estimate. We annualize it the same way. Oh dear Lord, I'm going to kill myself if these keep happening, but I have a feeling they are. So let's copy all of these over just to make it a little bit easier. We just need a 21% rate. But now, rather than 25%, we're halfway through the year, we actually cumulatively owe 50%. 50% is what we owe. Well, we can just ignore last year because remember, as a large corporation, last year's numbers don't matter. So my required estimated payment is $94,500. However, I've also already paid $4,500 and $42,750. So the actual amount I need to pay is $47,250. Let's just clean this up a little bit so that it looks nice. There we go. I like that much better. Okay, so that's my second quarter payment is $47,250. All right, now we're ready to march on to Q3. Q3 is due September 15th. Now we do have second quarter information. So we'll use the 475. That's 6 months worth of data. How do I annualize 6 months worth of data? Well, I multiply it by 2. So now I can take that, multiply those together, the same 0.21. Let's drag this one across. There we go. So my annual estimated tax is $199,500. However, I don't owe all of it. I only owe 75%. So 75% of that amount says at this point in the year, I should have paid $149,625. Okay, so that is my required payment. How much have I already paid? Well, I've already paid that. Whoops. I've already paid that. I've already paid that. And I've already paid that. So how much do I actually owe? $55,125. So my third quarter payment is going to be $55,125. Now let's march on. We're marching through time and we're up to Q4. My Q4 payment is due 12/15. Ay, ay, ay. There we go. We're just going to make it easy. All right. So what data do I have as of 12/15? Well, let's recall I don't have year-end data. I only have data through the end of the third quarter. If I want to annualize 9 months worth of data and make it into 12, then I'm going to perhaps divide by 9, divided by 9, and multiplied by 12. That gives me, whoops, I didn't really want to do it for the whole amount. So that equals, I had it right the first time, 12 divided by 9. There we go. Let's blow that out so we can see the, there we go. So 1 point and a third, right? 1.3 repeating. So now we can do the math on that. And we get 880,000 is again our estimate for what our annualized income is going to be for the year. We got a 21% tax rate. Now we in fact do have to pay the entire amount, so we owe $184,800. Well, I owe $184,800. I've already paid this. I've already paid this. I've already paid this, and I've already paid that, which means that my final payment is $33,175. So just for the sake of it, let's add up our 4 quarterly payments that we've made plus the amount we applied from the prior year. There's the $184,800. That's exactly what we would have expected, right? That's the amount we have to pay. Interestingly enough, look that our actual end of year taxable income is $920,000. If I multiply that by 21%, you can see that I actually owed $193,200. However, if, as long as I've deployed the annualized method properly, as long as I paid the $184,800, I will not suffer an underpayment penalty. That's how the annualized method works. And that's because we don't really know what the corporate tax liability is by December 15th. We just don't. And so this is the version that most corporations use to estimate their estimated tax payments for the year. All right. That brings us to the end of this video.